Yeah, so I've started recording. Yeah. Everybody know. Yeah, okay, guys. So let me just get straight into it. If you can see my screen, just send the reaction. Okay, perfect. Hey, this last week was a very interesting week. I took only let me check my journal. Yeah, I took only one trade last week. I think should. Oh no, I took two trades last week. So I'm going I'm going to break down the two trades that I took and tell you the rationale behind why I took the trades, and also do like a weekly outlook for the next week. So at the beginning of the week, we had an insane gap. I mean, by now, I feel like everybody should know why we had that gap. If you can't see it, here's the gap. So we had a gap up on the dollar index and then gap down on opposite pairs. So prior to this week, or prior to last week, which is the last Monday, this last trading week, because today is a Sunday, so let's assume that we are in a new week. So prior to last week's trading, my expectations was actually I was trying to sell the dollar index, right? But I wanted us to get up here first. Because if you look at this was Friday of the previous week, and that's last 2 weeks. So we closed like this on Friday. So I expected us to buy up here, and then I'll start looking for how to sell when we get up here, right? Only for the week, only for the week to open up, and it just went to my expectation where I was expecting that I would buy up to. It just went there. So okay, no wala. That means our sell was still in play, right? So as you can see, it just went up to that my expectation, and then we started seeing the sell that I was anticipating. But still, I wasn't sure initially at the beginning of the week on Monday when I wanted to trade. I wasn't sure. I wasn't still sure the direction that we might go. Why? Because I'm coming. I wasn't sure the direction that we might go. So I'm going to be honest with you. I was still thinking that we were still going to buy a bit because I felt like this touch was too tiny to be anything significant. So I feel like we're going to buy a bit. Let me just go to the pound because that's what I traded. So you can see the pound too. I had the same expectation prior to the week opening, right? You can see this large daily fair value gap here. So I was like, okay, this was Friday of 2 weeks ago. So I was like, okay, this last week, I want to see us sell into this place and then from there start buying up. And the weekly candle literally opened in the daily fair value gap, as you can see, very tiny, but can see it just opened inside, tapped it, and then we started buying. But again, I still wasn't confident that this was I wasn't confident that this was a very solid like sell into the daily fair value gap. I wanted to see us maybe reach the midpoint, but market had other plans. So initially, my outlook for my outlook for Monday was to continue selling off, right? To still sell off, deep. And I was about to even place the trade. But let me tell you why I changed my mind. So this was Monday. We saw the Asian session do this, then we saw London session do this. So I was like, okay, looking at the 15-minute time frame, I wanted to sell to this double bottom here, to this area of liquidity here. I wanted to sell, and then I saw this displacement candle on the 15 minutes. So I was like, okay, no wala. He opened the fair value gap, as you can see here. So I decided to short the market here, put my stop loss here, and then target here as my take profit. But as I said, I wasn't really confident that I was going to get, we were going to get sales or we were going to get buy. I was not really confident about where the market was going. I needed more confirmation. So I did not enter this trade. I was like, okay, for me to enter the trade, I'll wait for us to sell, to enter inside this fair value gap and then sell off a bit. Once I see that we are already selling off, then I'll join the trend, maybe join somewhere here and then put my stop loss at the recent high and then still target the same low. But then I started seeing markets do this until it violated this fair value gap here. Ideally, so when I saw this violation, I was like, oh, obviously, then we are no longer selling. Ideally, I would have waited for the market to come retest this, what's it called? to come retest this inverted fair value gap here. So this will have ideally been my trade somewhere here. Then my stop below the stop hunt, and then my take profits. My take profits this high here for a 2 to 8. I mean 1 to 2.8. And you can see that I also opened this mini fair value gap somewhere here. So this would have ideally been my trade. But then I started to think about it. I was like, okay, what? Because if you look at the Euro GBP, the pound was very, 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 very strong. Very, very strong. So I was like, if the pound is very strong, that means I might not get a sell to retest this place and then keep going. So I just entered the market. As I saw that we violated this fair value gap, I entered the market somewhere here, kept my stop loss in the same place, and targeted the same place for my take profit. And you can see how lucky I was. The market didn't even come back to my entry. It did not come back to where I initially said it was going to come, and it just started ripping off. So this was my first trade of the week. I made back the loss that I took from 2 weeks ago. I took a 1% loss 2 weeks ago. So I risked 0.5 on this trade and made back my 1%. So my account was break even again. Sorry, I'm coming. So my account was break even again. But I started to see the way the market was trading, right? If you see where I took profit from, see what the market went and did after my take profit, see where I took profit, and see all the movement that we had. So when I saw that, okay, the day closed bullish, like Monday was a very, can you see the Monday candle? Monday was a very, very bullish day. I wanted to continue the buying on Tuesday, right? I wanted to continue the buying on Tuesday. My target was that, okay, my hope was that we were going to, because if you look at the 4-hour candle, we're going to have, entry here. But I started to see the way this last candle was trading. This is why experience is very important in trading and in anything in life, basically. When you have a fair value gap, the way the third candle of the fair value gap trades is very important for you to know if it's going to come back into the fair value gap or it will keep going. If it closes very close, if it closes like if it closes near the entry point, there's a possibility that we'll get there. But if it doesn't close near the entry points, that's very, very, very shaky, right? So as I saw this, I went to Euro to look for the same opportunity too. I saw something similar. Euro was even worse because I had this 4-hour fair value gap. See how far from the entry it went. So I was like, okay, definitely I'm not getting an entry, a 4-hour entry. So I went to Australian dollar, which I remember saying on the call that the call we had midweek that I rarely trade, right? Which is funny. I really traded, but he ended up giving me the win that I needed this week. Now look at the same 4-hour fair value gap on the Australian dollar. Remember that third leg that I told you about? See the way this one closed. See the way this one closed related to the entry that I'm expecting. It's not really close too far from me. So I was like, okay, we might get an entry on the Australian dollar. And there was upside target here. This liquidity here was an upside target. So I put my entry there. And I put my stop loss below this displacement candle here. And I targeted somewhere around here for my take profit. Ideally, I would have gone for the high, but I don't like to reach too far. I just went for my 1 to 2, and then I left. The trade eventually played out on Wednesday, as you can see. So those were my two trades. Those were my two trades for the previous week, and this put my account in profit. Now for this week, what do I expect? If I go back to the dollar index, the daily. First of all, let's go to the economic calendar and see what we have. My phone, my FX book. Okay. We are in the economic calendar. Let's see what we have. April 21, Tuesday. We don't have anything on Monday. Interesting. April 21, we have employment, unemployment change, and unemployment rate and employment change on the pound. On what do they call it now? On the dollar, we have retail sales, inflation rates for March year on year on the pound on Wednesday, continuing jobless claims on Thursday. On Friday, we have basically typical end of the month economic calendar, nothing really crazy. So I expect good moves this week, right? But then again, remember that America and Iran are still at it, so that can really be a blockade to our expectations on the charts. But if you look at the dollar, we have a fair value gap here on the daily. This is my expectation for this week. We have a fair value gap on the daily, right? And you can see how we wicked towards that. We wicked on Friday towards that fair value gap. So I think whatever happens here is going to give me proper feedback for how I intend to trade. Whatever happens here, I still think we might sell. So we might buy up here on the dollar index. We might buy up here and then continue to sell, or I don't know. Anyhow, we can. Whatever happens here will just basically give me the feedback that I need to trade this week. So that's where I expect that. If you can see if you look at the euro, we have a fair value gap here, very tiny daily fair value gap here. Violated it. We have another fair value gap here on the daily. So I want to see, but the way this triangle is trading, to be honest, we might just start seeing sales to maybe here on the euro, which is also a good, point of interest for us. We might see something similar on the pound too. But that tiny listing we had last week, we might not actually get like a full what's it called? But let's see. This whole place is a dealing range. Where's the okay? From this low here, oh shit, sorry. So this high here is a dealing range. So let's see how we trade in between this dealing range. Let's see where we go from here. Do we come here, go higher? Do we come all the way here, go higher? Or do we completely violate it? We just get feedback from the market, right? Our job is not to predict where we expect that the market will go. It's just to react to whatever we see, whatever the market tells us. Femi, your hand is up.
Yeah, can I go ahead and ask the question like real quick?
Sure.
Yeah. So you mentioned something about the third leg of a fair value gap
Yeah.
being when it's closer to the fair value gap, it gives it like some sort of revalidation. So now in case where you have like two fair value gaps like building up, how do you tell which one will be the best replacement, like the best place to set your trade? So the first one might be might be close to where the market, and the second one is like a deeper fair value gap. Oftentimes, will the deeper one be the most reliable one, or the one that is nearer to where the market is?
Okay, I'm coming. Give me a minute. I'm coming. Okay, that's a very good question, and I think I've thought that I've thought I've thought the concept before of how we know, right? You know, the simple answer to the question is that we don't know. That's why we wait for feedback. There's something we call dealing range. So, as I pointed out to you here, from this low here to this high here is the dealing range. So when you have a dealing, what am I doing? When you have a dealing range like this, you have a high to a low, right? I'm wondering why this thing is not having like a midpoint. The hell I'm supposed to have here. So when you have a dealing range from here to here, right? The midpoint is what we call equilibrium. And many times they say that if you are now this equilibrium that we have equilibrium. Okay, I think I can write on, can't I write? Oh, I thought I could write. Okay. So we have what we call equilibrium, EQ. Let's just use EQ for it. Equilibrium is the midpoint. Then we have premium and discount. Premium is the obviously expensive price, and then discount is cheap price. So if you are trying to buy, they always say that it is best to buy from discount. If you are trying to sell, they say that it is best to sell from premium. So in the midpoint of an equilibrium, ideally, if we want to buy, right? Let's assume we want to buy this movement now. Ideally, we are waiting for feedback. Yeah, we want to see price get to. If you draw this, let's see where the discount is. This low, so this high. Ideally, we can see how this big fair value gap comfortably rests below the discount point. So ideally, if we want to see buys from here, we could expect that we get, we should get a sell-off into the discount part so that we can start looking for buys. But the truth is that many times in the forex market and out of experience, you realize that it's not everything that price you get to discount, right? Price can get to this place now. You can see that we have like can you see this gap here? I brought out the gap, this gap.
Yeah.
Very good. We could also have a retest of that gap, and then we can continue going higher from there. That's why what we do is that we wait for feedback. Now, what do I mean by feedback? We wait for the market to show us its hand. Now, in a situation where we have buys like this, right? And we want the market to retrace. We want the market to retrace so that it can give us. We want the market to retrace so we can start looking for more buys, right? We will not, just because the market has gotten to a daily fair value gap or a fair value gap of some sort, that does not mean that we'll not go and place entry. We'll not place entry here, put our high here, then put stop loss here. No, we have to wait for the market to do something like this. As it has gotten to, let's just assume that we have a fair value gap somewhere here. The market has gotten to. You want to see the market do something like this. then we have gotten our feedback. Do you understand what I'm saying?
Yeah. So like the
So this
confirmation does not just end with the fair value gap being in discount where you are looking to. The confirmation only
exactly,
begins when there's a reaction at that point.
you get my point exactly. So the
Okay.
confirmation is only valid when there's a feedback. This is the feedback that you're looking for. This is the feedback that you're looking for. Like, okay, now we want to buy. Then you can now start looking for buying opportunities. Like maybe there's a favor look up, it opens up here. You can now do something like this, put your this thing and then target this high here. But now you are sure that you are buying. Do you get? Now you are sure that you
Yeah.
are buying compared to just okay. Now we don't in favor look up. We now go and put entry here and put stop loss and targeting. Market can as well just continue going down. The market can just continue do something like this. Sorry. The market can just, continue. You cannot decide that he wants to continue like this. What do you do? And then the worst part is now that he does something like this, stops you out, and then now start moving. And then now start moving up. Now it will pain you because you just be like, okay, you were right, but you entered at the wrong place. This move up here, this move up here is what will have been your feedback. So now tell you that okay, oh yeah, it's time to start. It's time to
Buying.
start selling. Sure, you get
Mm.
it's time to start selling. So you really need feedback.
Okay, thank you.
Yeah, you're welcome. So trying to identify feedback, like proper feedback too, is another what is it called? It's another skill on its. What am I doing? Eraser. It's another skill on its own. Trying to figure out like, okay, did I get a good feedback or did I not get a good feedback? How do I know like we have that's why you hear things like change in market structure or break of market structure. So what you want to see when you get to this place, okay. What you want to see when you get to this, when we get to this area of interest is we want to now see like a break of market structure. But you might not even have to wait for like a daily break of market structure. That's where you now do what they call time frame alignment. So if you have a daily fair value gap, you can get your break of market structure on the 1 hour, on the 4 hour. I don't know if you understand what I'm saying.
Yeah, like the confirmation also does not just lie in one time frame again. Like you said,
Yes, exactly.
reaction as a valid feedback also must be confirmed again.
Yeah, yeah. I'm coming. So that's really what we are now looking for. We are looking for the feedback first of all, and then we are looking for a confirmation of that feedback. We're not just looking for anyhow kind of feedback. Sure you get. So that's now if you can see that everything is really tight. The forex market is really just um the forex market is really just a like everything on all the time frame aligns. Now, if you look at this chart, it's a daily chart, but you can still see the same logic that I'm talking about. From here to here, I'm coming. Where's my from this low here to this high here is a dealing range.
The chat is not showing.
Are you sure? If you can see my chart, just
It is
react.
showing. It's probably your network. Probably leave and rejoin.
Okay. So let me just continue. Let me not overwhelm you with this. But here is it. This low here So this high, what will be this? So this high here is a dealing range. Now you can see how the market reacted when it came to the discount. So if this is a dealing range, that means the midpoint of this dealing range. Let me mark that out with these two. Let me use these two to mark it out. Okay. Now this is the midpoint of this dealing range, right? This is the oh god, I don't mess them up. Okay, let me use this tool to just drag it. This is the midpoint of this dealing range. You can see if you are trying to buy up to this place, you can see that it came all the way to what do you call it now? To discount, right? And you can see the feedback it has given us now that it has come to discount. You can see this displacement and this break of market structure. So we have a break of market structure here. This high here. Because ideally, what you expect is that market, when it is coming down, you want to be seeing lower highs and lower lows. You want to be seeing lower highs and lower lows, right? You want to be seeing something like this: lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So when it gets to discount, now what will you now regard as okay? Very good. I'm coming. Give me a minute. Continue. Not all distress me.
Still can't see the screen.
I don't know. I think that's like from your end. I think that's from your end. I'm coming. Give me a minute. That is the thing is supposed to show something like when you press this continue, it should show something like join from TV or something like that because there needs to be a QR code that you're going to send to me. Then I can log in from here for you. So as I was saying, when it goes like this now, it has come to discount. Now, what you want to see is a break of the market structure because this is the market structure right now, right? Lower highs, lower lows, lower highs, lower lows, lower highs. That is signifying a downtrend, right? Now, what will you regard as a break of market structure? When you are no longer getting that lower high and lower lows, you now see something like this. Now we have broken this high here. It's so funny because the thing about trading is that so many of these things are quite difficult to, because all this thing I'm telling you like this now, if you take it as like this is the only way the market is supposed to be playing out, you will get it wrong like mad because let me now bust your brain. Now, this break of the market structure is our feedback, right? Now, we also have to confirm this feedback. I will tell you why we have to confirm the feedback. Now, we want to see something like this again. On this rally up here, it should create like some sort of fair value gap or whatever like that, right? So we want to see something like it should enter that fair value gap and then continue higher. Then this is your feedback. Why do you need this? Then you cannot enter the trade because as this created this second leg now, you should expect that it should also create another fair value gap. Now, this is what we call second distribution. I think I've taught this mode, I've taught this thing before. Okay, very good. Sorry, give me a minute. And all this stress me, man. Okay, sorry. Now, why do you need now this second leg is where you now find your own entry. You will now put your long here, put your stop loss at this low, and then continue to find your okay, this is the high here. This is the high here. So you now find your buy here. Right? This should not ideally be your trade. We call this second distribution. I can tell you that this second distribution is very rare for you to see it in the market. It is very, very rare, but it's like 90% probability that it's going to play out. This trade almost nearly never fails. There was a time that this is all I used to trade. Second distribution on any time frame. Just trade the second distribution. But then again, it started to get rare, and rare over the years. But that's besides the point. Now, why do you need to wait for the second distribution? Because the market can as well go and do something like this. As it starts taking this high, break of structure, everybody will be like, okay, you don't break structure. Oh, yeah, time to you now do what? Put your maybe fair value gap is here. You now put your fair value gap here, put your stop loss here, then target the high. And then the market will now go and do something like this. And then you're like, I thought we just broke structure. Now, breaking of structure is also it's not every, break of this high. It's not every time we trade above this high that we have broken structure. How we traded above this high is also very important in the context. Now, if you have a candle that, came here, broke this high, but it did not close above. Like, it basically just wicked back, leaving you a wick, and then just closing inside. Let me explain what I'm saying properly. Okay, very good. This is what I say you should do. Those distressing things. So now, please you can't remind me where I was. My father is stressing.
He said the candle just wicked.
Okay, very good. So now we just have a week, like you have the candle just, okay, very good example. Very, very good example. Can you see this high here? Now you're supposed to be like, okay, once we trade above this high, break of structure B. Can you see the way this candle traded? Can you see the way the candle just went, wicked it? It won't do it again. Is because I did not pay before. I have paid now. Hey God, I beg. Now, you can see the way we traded, like it just went wicked. So this is not a break of structure. See this candle here. This is a break of structure. That is what makes break of structures different. Because
sorry, can you come again on that break of structure, please? Please come again on what you just did now, break of structure.
I said, like, because of the fact that we have, I explained that this is the structure of a sell trend, right? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Then just because we have a trade that now comes and breaks this high here, it does not mean that it does not mean that we have broken structure. How we broke structure is way more important. And what is going to give us that knowledge of how we broke the structure is the way the candle traded when it's cleared this high. And I gave an example of, let me hide this. Can I hide this? Okay. Hide this, okay. Now, I give example of this high here, right? You can see that from this downtrend we have been having, look at it now. We have been having our downtrend structure. We have been having our downtrend structure. You can see it now. We have been having our downtrend structure. Now, just because this candle now clear this high, it does not mean that we have broken this structure. Why? Because see the way the candle closed. This is not confidence in a break of structure. What you want to see is, if you break structure, is you want to ideally see a good candle closure. I don't know if you guys understand what I'm saying. If you understand what I'm saying, just react. Okay, very good. I'm coming. Give me a minute. I'm coming. Me, my papa, and Netflix today. Okay, so where was that? Can someone remind me?
You were comparing how candle closes above the market structure.
Exactly.
Right?
So when you have a strong closure, like the trade above the break of structure, then we now close very, very strong, like this one here. Then you can now say that, okay, we have broken structure. I'm just happy that what I'm explaining is literally what is on the chart right now. Right? We can see that, okay, we have broken structure, but that is also another half of the story. How do you now really cement that idea that, okay, oh, I've broken structure? Well, I told you, even if the market closes bullishly, right, or it closes very, very strongly, it does not mean that we are broken. You see this whole thing like this. The market can come, it can continue going down. Oh God. We can have this. It is very, very possible. Why is it possible? It's something we call inducement. So inducement is like a fake move, right? It's just to trap people. So this is inducement, when we have something like this, it's basically to just trap people that will buy early. That's why we also have to wait for another leg of confirmation, which is, we have, ideally, when we break market structure, we always have some sort of PDRA. Even if you don't have some sort of PDRA, it's going to be there. Like, it's not even possible. You have either order block, you have either fair value gap, you have either breaker block. All of them will be present. Like here now, we have our breaker, we have our fair value gap, we have everything. Right? So you want to see markets trade into that PDRA and then give you feedback again. Then when it gives you this feedback, you can now say that, okay, ideally it's best to see the feedback above. You can now say that, yes, this now is like you've not carried the probability from, let's say, 60% to like 80%. So now you know that any buy that you take from this place now is going to be a solid buy. So I'm really, really watching how this market trades. But if we really get good movement from here, then trust me, the rest of the year is just going to be wonderful. The rest of the year is going to be wonderful because ideally, whatever happens from this point, we're having a trending market regardless. Do you get what I'm saying? Is that how we trade to this low, it's still going to be a trending market. Is that how we trade down here, continue, it's still going to be a trending market. Anywhere we move from here is going to be a trending market. And that's why I'm happy. So ideally, I think we should be back in money making season. The season I hate the most is consolidation. You see all this kind of markets is the worst to trade because they're not going up, you're not going down. When you have straight trading market like this, it's easier to trade. When you have see this one now, see this buy. This was when 2025 last year. See this nasty buy. Easier to trade. See this nasty sell. Easier to trade. But when you now start having opinions like waiting with this, you can't navigate. You don't know where you're going up or going down. You put your stop loss up, it will take you out. And you put your take profit out, it will take you up. Put your stop loss down. Anywhere you put your stop loss, it's going to take you out. Right? So this is now what we now do. We now wait for the feedback, another fair value gap, and then this is going to be our trade. Much more from if it's a daily, if this thing happens on the daily time frame, it is days of before you get to this top here, days of opportunity. You don't have to be really patient about what you're looking for because you have a lot of opportunity. In trading markets, there are a lot of days you have a lot of opportunity. All you just have to do is to be patient enough to wait for those days. So I think that was a very interesting concept, and that was a very nice question. Thanks for asking the question, Femi. Any further questions? Someone raised their hand. Benjamin, okay. Let's get your question.
Is there really a way to know when a move is an inducement?
There's no see Forex in trading, there's nothing you know. You don't know anything. Like all you have to do is wait for feedback. You don't have to wait for feedback. You don't know anything. That's why we don't predict. Any trader that tells you that okay, now here we go. See, prediction is just a fool man's errand, or it's a fool's errand. Because they're trying to say, okay, we are buying here. Oh yeah, you now buy. The market will not take you out. Why? Because you're not waiting for the feedback. You're not waiting for the market to tell you, oh yeah, it's time to go. Oh yeah, wait, it's not time to go. Oh yeah, now it's time to go. That's what we are waiting for. We're not waiting for. Okay, let me give you an example. I'll give you an example of. I think I broke down one of the trades that I took this week. This GU. And I'll tell you, I said that before I started to break down the trade, I was even laughing. You guys don't ask me why I was laughing. Why I was laughing was because this was that trade. This was the trade here. I told you that this was my initial trade. I was targeting this low here. Then to me, I saw this. Oh, very good. Look at what I just explained on. Look at what I just explained on the higher time frame. Still happening on the lower time frame. Because market is, I can't remember the word they use for it now.
It's fractal.
Exactly, it is fractal. Everything happens on every time frame. Look at this thing now. A novice trader will have been like, oh yeah, now see this. Look at this break of market structure that I was telling you about. You know, when you're buying, you are getting higher highs and higher lows, higher highs and higher lows. You now get here, look at the strong candle itself, it used to close. You'll have been like, I'm confident that we are selling. So, as I said that day, I was supposed to sell here. I was supposed to sell from this fair value gap here. And put my stop loss here and then target this low. This was supposed to be my trade for Monday. But something told me that, okay, since you're not really confident yet, why don't you wait for feedback? So what will have been my feedback? My feedback will have been we trade into the fair value gap and then we start selling off. If we sell off and break this low here, that will have not been my trade. I will have entered the market from here, put my stop loss here, and then that place that we entered the fair value gap from will have been my stop loss, right? So I didn't get the feedback, and as I was telling Fechi about the trade, I was telling Fechi about the trade, and I was, in fact, I was not just telling him. I already sent the. I'll find it now. I've already sent the trade to the group that I'm taking this, or I'm really just waiting for feedback for this. I'm looking for the chart. Let's find it. Yeah. I'm coming now. I'll find it. That was April when. Okay. Was it not this group I sent this to? Okay, very good. Let me share the tab instead. I didn't send it to this group. I sent it to the other group, but as I was about to enter the trade. Basically, what Peju was telling me. It was like, oh, because he lost his account to that sale I wanted to take. And then when he told me, oh, he has breached his account, I was like, sales are B. And I was like, I won't carry sales too. I just say make I wait. So it was basically waiting for that feedback that saved my trading. It was basically waiting for that feedback that saved my trade. It's on the other group that I sent it to, the group I have on WhatsApp. And I can't share that one because I don't have it as a tab. Anyways, I sent the group, the chat to them, the team today. As Pechi told me that, because as I went to the group and I saw that Pechi told me that the trader stopped him out. I was like, okay, very good. That's feedback. That's also feedback. So I basically entered the trade because it is stopped and you go out. So this is a classic inducement scenario. You can see the way it just went. You know, people that are sold too early, like Fechi, you stop them out. And then me, I just entered from there because I was like, okay, if we are going to be selling, we don't need to get to this place. And then I just entered and then we just kept buying from there. Sure you get. So you can never really know, when it's going to be an inducement. You just have to wait for feedback. Waiting for feedback is very important. Very, very important. It will save you a lot of losses. And that's one of the hardest things that I had to learn this year. It will save you a lot of losses. Just waiting. You're just waiting for the market to deal its hand to you, to expose itself. And then you can just find your trade from there. So, yeah, any other question? Adeyanju Emmanuel. Go ahead.
Good evening, sir.
Yeah,
I
good
just
evening.
want you to do a short analysis of AUD USD.
I already did that now. I did that in the beginning of the call. I showed my expectation for what I'm expecting this week. So dollar index. I see a fair value gap here on the dollar index. So I expect the dollar index to at least buy to this place or buy here, then give us feedback to what we are supposed to do. So if I'm expecting buys on dollar index, I'm expecting sales on AUD USD, and you can see the week. So you can see the week. So from the week, you can tell that, okay, another good example of this waiting for feedback that I told you guys about. Look at this trade now. The market came all the way to this fair value gap here, and then see the feedback. See the feedback. Sure, you can see. So feedback is very important. So all this move up here, we did not make a dime from it until we go to this place here. This is where we made money from. This small move from here to the high here is where we made money from. All because we waited for the feedback. So yeah, you can see what I showed you. Now look at this chart now. This is the daily time frame on the Australian dollar. This thing that just happened here now, and what happened on the pound on the M15. What's the difference? Basically the same thing. Basically the same thing. So price is fractal. Most logic things that happen logically on higher time frame also happen on the lower time frame. I can see somebody raising their hand. Femi.
Yeah, using this as an example, the first reaction to the fair value gap you highlighted before, you see that there is another what will I call it? Another retest of that area. Is that what you call the second distribution? Like the first part, this first green candle in that fair gap. No,
This
not
one.
that one. No. Like below,
This one.
down below. When you when you zoomed out, he said that there was a retest to the fair value gap below. I can't
Yeah.
highlight.
This one. You can see the point I was trying to make to you that time.
Yes. That's what I'm saying.
Can you see that there are two fair value gaps? Now you will ask, how do we tell which fair value gap is going to react from? Feedback. From this feedback here, from this break of structure here, you can tell that obviously we're not coming here. We're not coming to this one here. Do you get?
Yeah.
Exactly. It's just feedback, just waiting for the market to tell you what it wants to do.
But the problem with waiting for the market to tell you what it wants to do, I feel this is where people should have problem with, maybe me myself. So say I'm waiting for a particular entry, let me call it an entry, a particular area, that when it gets to this area I want to buy, and then there's a reaction of the area I want to buy. Do I now start is an illusion of like a perfect entry? That's what will prevent me from taking a trade after the reaction has actually gone off where I wanted to enter. So it doesn't look like I'm chasing the trade. So I'm looking for a particular area to buy from, and then there is the valid reaction that I was expecting for the market to react at that location. So now the market has reacted, like you said, in this trade, that you had to buy off a point, not where you wanted to buy from, because of you waited for the reaction. So maybe the problem is like the illusion of looking for a perfect entry. And I don't know if you're able to like break it down, that there is actually what they call a perfect entry, and then some entries might not always be perfect, but you have to be on the lookout. Maybe that's where the issue is. Because if you are anticipating a perfect entry, you might either miss it or get it. You might either get it wrong or get it right. And if you don't get it right at that point, to also still get it right when you enter it later. But how are you sure you'll be able to enter it later? Because it's not more like the perfect point of entry.
Yeah, that's what I'm saying. At the end of the day, everything is really just about feedback, Femi. It's really just about feedback. Yes, like, okay, very good. If you look at something like this, that's why we do our outlooks with the higher time frame, because higher time frame outlooks give us more stability or give us more avenue to understand what we are doing. Now, if you see something like this in the market, okay, let's assume I wanted to buy now. Market has gotten to this fair value gap, this fair value gap here. It has given me feedback that is buying up. And look at this fair value gap. And I miss this fair value gap. Your mind will be like, I should have lost bought. Why did I wait for this fair value gap? Right? Abi Femi. That's what you're saying, Abi.
Yeah, exactly. Yeah, like if you don't buy at that point, you'll be like, oh, I've missed this.
Exactly, but you have to remember that you are playing off the daily time frame, Femi. So ideally, if we are buying up to this high here now. So this is a very, 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 very far place that you will still see trading opportunity. Now, remember I told you about how you can know if a fair value gap will be tested or not. Look at this fair value gap here and ask yourself, why was this fair value gap not tested? Look at the way the third candle closed. Now, does that make any sense? Look at the way the third candle closed. It closed so far that you will have been like, for this trade, for the market to start reversing to come back to this fair value gap. At this point, I'm not even sure I trust that it's going to buy you. Do you get?
Yeah.
So always look out for the way the third candle closes. Now look at the second one that it came to retest. Look at the second one that the market actually reacted from. Look at the way the candle closed. You can see that it did not close so far from it. Then you can see the way this other candle too closed. So you know that okay, I should expect sell inside this place. But when this last week opened, it basically just went to the fair value gap and opened. And then we just started seeing buys from there. So in this entire move,
Okay.
in this entire move now, from this low here up to this high here, I only got one trade. One trade, which was this.
Okay. Adife, I think I'm getting something new out of what you just said. So if you are able to know where the market is going on the daily, there are a ton of opportunities for you in the lower time frame, which is what brings about time frame alignment. What's happening on the daily? Ideally, you should be looking for the same.
Exactly. This is why we do outlooks on the higher time frame, because if we can get, that's why we call it an outlook. If you can get an outlook from the higher time frame, definitely what we are trying to do when we do outlooks, when we do outlooks, we are not saying that okay, we must be right. The point of the outlooks that we do is that we are trying to see how we can open ourselves to opportunities every week. Now, imagine this entire move.
Correct.
Now, I only saw one trade from it. One value trade was what I saw from this entire move. Somebody would have been like, so from year to year like this was all you could see. Does it matter if I walk away with $4,000? Does it matter? Do you get? Do you get or seven, or have a big account, $7,000 or $11,000? Does it matter if it was only one trade I saw from all that big moves? It doesn't matter now, because at the end of the day, you waited for the right move. At this point, when the market got here, when I saw this fair value gap open, there's something me and my friends we used to joke with. We used some trades, because of trades, put your mama on this trade. Put your mama on this trade. That's the kind of confidence we have. Put your mama for this trade now. Okay, see, sometimes I really love teaching forex. I swear. You know, I say, to the teacher, sweet pass me the chop loss. Guy, look at what I just explained again. I showed you this thing on the 15-minute time frame. I showed you this thing on the daily time frame. I'm going to show you again on the 4-hour. Look at this fair value gap. Tell me why price did not come back to it.
Because the third candle closed far away from it.
Exactly. Look at where the third candle closed. If you saw see the way the third candle closed, if you saw the market coming back to this place, would you be confident that you have a buy setup? You cannot be confident now. Why would the market erase all these moves just to come and tap this fair value gap? Like, the fair value gap is not that important. The fair value gap is not that important. Like, I mean, this is what we call a breakaway gap. You can know a breakaway gap from the third leg, or if they can't do with react from the third leg. Look at the one that brought the trade that I took. Look at the way it closed. It not closed too far, so I was confident that it was going to tap compared to EU and pound that closed very far from their own. And this trade, I nearly missed this trade. I'm not even going to lie. The only reason why I got into this trade was because of the Asian session. Remember, this is Australian dollar USD. It trades more. I'm coming. It trades more in the Asian session and in the New York session more than the London session. So if you look at this trade now, you will see where the trade played out. See, it basically came to tap that favor lookup in the Asian session. I was asleep when this. I just woke up and I just saw that it was in the favor lookup. I just entered the market. I didn't even straight. I didn't even think it twice. I just entered the market. That's how I was able to, get this trade that I eventually got. And you can see like how the trade eventually played out. So sometimes market like this is what we really pray for. But I'm going to be very grateful if you can really go back to like a trending market. Honestly, I really love trending market. Trending market is money making. You just be making money. You really wake up and be making money compared to all these what do they call it now? All these choppy market. Person just is suffer. Anyways, I don't take too much of your time. We already passed the 1 hour mark. Any more questions? So for the Australian dollar guy, is he still on this call? Yeah, Femi, what's up?
Yeah, my last question for today.
Okay.
So still speaking on the time frame alignment, you just added one more thing to the, will I call it Arsenal, where you said the Australian dollar is supposed to move in the Australian session. So let's say we are looking at EU now. Whatever setup I'm looking forward to, that is after I've confirmed on the daily that we are in the buying range. Like, you said billion range. That is what's happening in the moment, like a screenshot of what's currently happening. So if we are in a dealing range, we are expecting a buy, and I'm looking at a retracement or a retest for a fair value gap.
Yeah.
I should also be looking for that retracement to happen during either the London session or like the New York session for it to all make sense together. Is that correct?
Can you come again?
The Australian dollar trade, it was able to sync perfectly during the Australian session, because that's like the session when the Australian dollar moves. So if I'm on an EU trade now, and then I'm like expecting a retracement into a specific zone, or I'm expecting a reaction as for a confirmation to go into the trade, I should also be looking towards the reaction happening during New York session or London session when the pair actually moves.
Yeah.
Okay, correct. Thank you.
So any other question? David, okay.
I don't know what the guy that just asked this question now, though, I think I have, maybe you do not completely understand what he's saying. He's saying that all those things, you want to expect all of those things to align in the key zone. Sometimes it might not be in the Q zone and it will align. It's sometimes it might happen outside the Q zone, right? So it's not like everything just perfectly happens like in the Q zone, right? Sometimes it might be outside the Q zone. Sometimes it might be. I think it should not be up to you to decide if you want to carry the trade outside the Q zone or not. But like the market is not like perfect that it just every perfect happens in the Q zone, right? So I don't know if you probably missed that. I didn't hear.
Okay, I agree with that.
That makes sense now. No, I'm just like stating that according to what you just explained, where the retracement that we're talking about also happened during the Australian session.
Yeah.
That can be like something that you, like I said, added to the Arsenal. You can also check if
obviously,
that, like
definitely
retracement.
You have to also look out for
session
trades now. You have to also look out for session trades. You have to also look out for session trades because I mean they will move. You should expect that when they should move. But as David said too, it's not every time that they will move in their right session. Market the crazy, market the crazy past human being. So you really have to be dynamic. You really have to be dynamic. So yeah, have a lovely week, guys. I hope you guys make money this week. If you make money, I beg send give me on. I'm poor and I'm broke. Thank you very much for coming to this week.
Talk.
All right, now take care of yourselves. I hope you guys got a lot of value from the meeting today.